All right, so I'm going to show you how to calculate the intrinsic value of Alibaba's shares. Now, this is a bit tricky because there are two types of shares. You have the US listed share and the Hong Kong listed share, and they're not the same. In fact, one US share is equivalent to 8 Hong Kong shares in terms of its value. It's a 1:8 ratio, okay? So I'm going to show you how to calculate the US one first. The one listed in the US is known as an ADR, American Depository Receipt. All right, so let's go. So name of stock, Alibaba. Stock symbol, US1, BABA. So we have to put in the cash flow from operations. Where do we go to? You should know by now. All right, go to Yahoo. And again, we had Alibaba. Under cash flow, put down the latest cash flow from operations, which is 180,607. Next, the total debt. What's the total debt? We go to balance sheet. And remember that for balance sheet, always choose quarterly. Okay? And open up liabilities. It's always under liabilities. Open this up. Open that up. All right. So current debt plus long-term debt. Okay. So the long-term debt, you could open this up more. Okay. So current debt, 4,215 million. Long-term debt, 118,172. Let's add that together. 4,215 plus 118,172. 122,387. There we go. And again, this is in renminbi. Sorry, I forgot to convert this. This should be in RMB. Yeah, okay. Okay, renminbi. Yeah. Next, how much cash do they have? So cash will be under assets. Under current assets, total cash 357,210. Okay, under cash equivalents and short-term investments, 357,210. Boom. Okay. Now, what's the growth rate? Now, here's the tricky part about it, right? We saw that on Finviz, the projected growth rate was only 3%, right? And on Simply Wall Street, the growth was 11.7%. Now, you know something? I don't agree with both of them, because I have studied this company in depth. I've read all the annual reports. I've read everything, and I think that this is not accurate. So what I did was I checked out the projection at Capital IQ. Now, Capital IQ is a premium research website. It's not cheap. To subscribe, it's about 20,000 a year. So they're the premium, so they have the most accurate information. And sure enough, when I check on Capital IQ, the projected growth rate of Alibaba the next 5 years is 22%. All right, 22%. So I'm going to use 22%. Now, if you think about it, the last 5 years, Alibaba grew at over here 27% in the last 5 years. All right, so 22% for the next 5 years is not unrealistic. Okay, 22%. So put 22% over here. Now, some of you may say, but Adam, what if I don't have the subscription to Capital IQ? I have to use Simply Wall Street or Finviz. Then I won't put down 22%, I'll put down 11%. Well, then there's nothing wrong, because if you put 11%, you're just being ultra conservative, right? Okay, so if you can get a share price below that, then that's a real steal. So there's nothing wrong with that, okay? But I'm here to tell you that based on experience and knowing the business, right, when I looked at the one at Capital IQ, 22%, I said, yeah, that's about right, 22%. Okay, so next 5 years, going to grow at 22%. How about the following 5 years? Again, I like to chop it by half. So put 11%. Okay, and for the last 10 years, for China companies, we use 8%, which is the long-term GDP growth rate of China plus 1%. So let's put 8% there. Okay. Now, what's the discount rate that we use? All right, so for the discount rate, we scroll down and we look at this table, this quick reference table. Now, this is for China stock, so it's the one on the right, okay? So based on the beta of 1.56, the closest discount rate that we use would be 10.5% discount rate. Now, I know some of you will be asking, what if I want to analyze non-US and non-China company? I like to analyze an Indian company or Singapore company. What discount rate do I use? Well, you have to calculate it manually. So the way to calculate it manually would be to take your discount rate is equal to the risk-free rate plus beta multiplied by the market risk premium. So every country has a different risk-free rate, which is normally the 10-year treasury bond or the 10-year government bond. And you add it to beta multiplied by the market risk premium. So I take the average market risk premium for the last 10 years. Now, so where can you get the risk-free rate and the market risk premium for, say, a Singapore company or an Indian company? Well, you can go to this website, which is marketriskpremier.com, and you can choose the country and you can then calculate your own discount rate. All right. But for US and China stocks, you can see I've already done this table that makes it a lot easier. All right. Okay. So again, discount rate 10.5%. Let's punch that in. There we go. Next, how many shares are there? What are the shares outstanding? So right now we're looking at the US listed ADR shares. So how many shares are there? All right. So we can go to Yahoo Finance or go to Finviz to check it out. Let's go to Finviz, and from Finviz you can see shares outstanding over here, 2.68 billion shares or 2680 million shares. Punch it in. There we go. All right, so you can see our final intrinsic value for Alibaba is 2105. Now again, this is in RMB. We have to convert it to US dollars. So go to a currency calculator on Google. All right, just search for USD RMB. There's a currency calculator and put under yen 2105. And this will give you 297 US dollars. Okay, so there we are. The intrinsic value is 297 US dollars. That's the intrinsic value. So what's the current share price right now? Current share price of Alibaba is in US dollars 217.64. All right. So 217.64. So you can see the current price is below the valuation. How much? Let's use our calculator. Now, you can't use this one, okay, because this is actually based on this figure. All right, so we're now comparing the intrinsic value to the current share price. So we take 217 divided by 297. So roughly that's 27% discount to valuation. Okay, so let's put it down, 27% discount. Right, so there you go. That's pretty undervalued. All right. Now again, this is based on the 22% growth rate that I got from Capital IQ. Now, what if you use the very conservative growth rate from Simply Wall Street, which was 11.7%, which again, I don't believe is that low, but let's just put it in, right? So if you use 11.7%, and let's put it the same over here, and that will give you an intrinsic value of 1466. Okay, and how much is that in US dollars? 1466. That gives you 206 US dollars intrinsic value. Right. So based on this very low growth rate, you can see that then the share price looks slightly above, or the share price looks slightly above the valuation, just slightly above, which is yeah, 5% above valuation. Right? So in other words, worst case scenario, what you're paying for the share right now is just about 5% above its value. Worst case scenario, right? But if it grows at 22%, which is what we more or less expect, and then slowing to 11%, that is a 27% discount. So we've got a pretty good margin and buffer of safety. All right, so if you're buying the US shares on the US market, BABA, then you'll be using Think or Swim to look at the charts or to place your order, right? You buy through Think or Swim or Interactive Brokers. Now, personally for me, I have been buying Alibaba on the Hong Kong Stock Exchange. So when I buy in Hong Kong, I buy it through Interactive Brokers, and the charts I look at are from TradingView. Okay, so this is TradingView, and in Hong Kong, the ticker symbol is 9988. There we go, Alibaba, that's the one. All right. Now, the one listed in Hong Kong was only listed a few months ago, so you can see that the charts are not very complete. They're very new charts. But no worries, because both the Hong Kong and the US should move more or less together. All right. So in other words, I can look at the US charts to determine where to buy, and then buy the next day in Hong Kong or on Hong Kong. Roughly, you get roughly the same price. Okay. So you can see that the one in Hong Kong is currently selling at 211.4, 211.4 Hong Kong dollars. So what's the intrinsic value of the Hong Kong share? Now again, it's a bit tricky, because remember that one US share is equivalent to 8 Hong Kong shares for Alibaba specifically. So let's now calculate the intrinsic value of the Hong Kong shares. So let's go back to our intrinsic value calculator. All right. And the easiest thing to do is this. Now, the only thing we need to change is we need to change the number of shares, right? Because everything else remains the same. But now we have to, instead of taking the US share, we're taking the Hong Kong share. All right. So remember, one US share is equivalent to 8 Hong Kong shares. So you have to take 2680 times 8. All right. So 2680 times 8. So this is equivalent to 21,440 million Hong Kong shares. All right, because each Hong Kong share is smaller than a US share for Alibaba specifically. Remember, this applies only to Alibaba, right? Different companies have different ratios, okay? Like for Tencent, one US share is equivalent to 1 Hong Kong share. So it's 1 for 1, right? For Alibaba, it's 1 for 8. So it's different for different shares, okay? So, now again, this is just a rough calculation. If you want to see the exact number of Hong Kong shares, you can go to Yahoo Finance. Let's type Yahoo and type the Hong Kong ticker 9988. There we go, Alibaba in Hong Kong. Go to statistics. And there we go. So shares outstanding, number of shares, 21.46 billion, which is 21,460 million. So it's Pretty close, right? The only difference is a 6, right? So it's 460. Let's change that to be precise. There we go. Excuse me. So you can see that based on the Hong Kong share, the intrinsic value is now 262. Again, remember this is in RMB. So now we have to convert this RMB to Hong Kong dollars. Yeah, I know it's a bit tricky, right? But like I said, this is a very challenging example I'm giving you, okay? So go to the currency converter and we're going to convert now Hong Kong dollars and RMB. Okay, so 262.9 RMB is equivalent to 287.45 Hong Kong dollars. There we go. Okay. So what is the current share price in Hong Kong dollars? It is 211 as we saw earlier on, right? Was it 211? Let's double check that. Yeah, 211.4. 211.4 Hong Kong dollars. Right? Which again is similarly roughly about 27% discount to the intrinsic value. So the discount that you get on the US market is similar to the discount you get on the Hong Kong market. Could be a slight difference, but more or less it's about the same, right? Now again, this is based on our 22% growth rate. Again, if you take the very ultra conservative 11.7% one, that will give you the intrinsic value of 183.15 renminbi. So convert that to Hong Kong dollars. That's 200 Hong Kong dollars. Which again is at a slight, the current share price 211 is at a current 5 or rather 10% premium in this case to the intrinsic value, right? So you can see it's not exactly the same, but more or less the same. All right. So to review, basically, if you're looking at the US dollar Alibaba share, the intrinsic value is 297. Okay, so at the current share price undervalued, if you're buying the Hong Kong share, the intrinsic value you look at is 287 Hong Kong dollars. So there we go. That's how we calculate the intrinsic value of a company in two different markets, in two different currencies. And again, this is pretty rare, but I wanted to throw you a challenging example. All right, so I'm looking at the BABA stock charts on Thinkorswim, and again, they should move closely with the Hong Kong one as well. So I always start by looking at the 10-year monthly candles and to see that it's on a nice uptrend like you see. All right, so very nice uptrend, and look for the pattern. Where's the strong support? You can see that on the monthly candles, the strong support is there. Can you see the strong support there? Yeah. So currently at the price here, although it's fundamentally undervalued, but it looks like it's not near the support. I always like to buy it near the support. Okay. Now let's zoom down to the weekly candles. Okay. So on the weekly candles, you can see breathe out, breathe in, breathe out, breathe in, breathe out, breathe in, breathe out. So right now it's breathing out, right? So like I said, I never like to buy when it's breathing out. I like to buy when it's breathing in with corrective wave to the support. You can see a strong support at the green line. Can you see the green line? The 150 is strong support. So ideally, like I said, if you want to buy it now, there's nothing wrong. It is undervalued, but I like to buy at the support, right? So ideally, I like it to come back down. Of course, if I could get it at the green line, it'd be fantastic. That would be about roughly 181 US dollars. That would be a steal. That would be stealing. I'll buy like crazy, right? But even if it doesn't come back to 181, I would say that if it goes to 194, right? 194, I'll start adding more shares because that is at least at the 50 moving average on the weekly candles. Okay. Now again, you can zoom down to the daily candles as well to get an even closer look. And you can see on the daily candles, right? You can see that, breathe out, breathe in, 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 breathe out. We don't have the breathing out. Wait for it to breathe in, and then we enter somewhere there. Okay? So be watching this, and we enter when the charts are right as well. All right, so hope you enjoyed that. Again, if you want me to do this analysis for you every month, the best 2 companies that I look for, join the Ultimate Investors Playbook.